Good morning, traders. Paul here with GammaEdge. Today is Valentine's Day, February 14th, also CPI release day. Let's get started. Pause your players here. Read to the very bottom. If you agree, hit that play button. Summary for today. The short-term model flipped yesterday. We have a new CT long. As I said, it started yesterday. Long-term, both the tick ribbon slopes are still negative. We could see that reverse today. Much slower. This is measured on a daily, weekly time frame, whereas the short-term is measured on a daily or intraday, depending on if you have butts in seat or not. So we're in day 3 of the slopes being negative. Again, if we see that reverse, then we'll be full bull on. We are with a new upside trigger day. New longs are enabled for today, and we'll talk a little bit about that. Market breadth, as viewed by our 52-week new high, new low. Breadth indicator resumed a bullish move yesterday with 192 new highs and 88 new lows. This will continue as long as the bulls are in control. We had 1 day reset in all of 2023, and it occurred 2 days ago or on Friday. So just be aware of that. The right goalpost remains at 4,200. Left goalpost is at 38. We do see the potential of 39 emerging. We also see the potential of 4,300 emerging. Just be aware of that. Also, in the SPX PM complex, we have a move upward of call open interest and put open interest. These are not Greeks. They simply answer the question, where are most people stacking their bets in terms of calls and in terms of puts? And when we see those move up, it's indicative, especially simultaneously, it's indicative of a bullish structure. Overall, most of the structures are bullish in context of the out-of-the-money calls. Those are the calls that are above us being added, and out-of-the-money puts, those that are below us, being closed. When we see that, that turns the delta structures green, call dominated, and for the most part, we're thinking that the structure is more bullish than it is bearish. A lot to digest here. Just pause your players and read through this, but I'll walk you through a couple things that I want you to see. So we've been in this downtrend. Yesterday, we did say watch for a reversal to the upside, which we did get yesterday. When we see this type of end of day behavior, it's something to pay attention to. So we get this new upside where the close today, or close yesterday, excuse me, is above the open, and that is a signal. We call that a tag combo 8. And if you look over here, it's got the description here: CT close greater than the previous day close, buy on the first day of the signal. So we have extensively tested this with our partnership with EdgeRater, with the CT. We don't think anybody else has anything like this. And frankly, if you just go and buy, the 2X ETFs, whether it be the Dow, the Qs, which would be QLD, SSO for the S&P 500, or UWM for the Russell 2000. Very, very good performance over a long period of time. These are the buy signals, so that's why you only see 1 day being indicated here. But getting in early in this particular case, buying on the open, has a very, very good behavior, and would suggest that everyone start evaluating that. On the bearish side, just note the slopes are still negative because we're below, but we could continue higher, especially with the CPI print today. Have no idea what's going to happen there. And then also coming down, we have the CPI print possibly bringing us lower. So just be aware that we could reverse. Not sure which direction we're going to go, but with the new signal here, with the new railroad track up, which is tag combo 10. You can read that here and read that up here. Things are looking positive, and personally, I'm a taker of the signals here today. Taking a look at the key levels, as I said, the SPX PM complex, we've had a drop here in the POI. We've had a rise in the COI. Again, these are not option Greek constructs. These are simply answering the question, at what strike do we have most of the people positioning their calls? And in the PM complex, which is the short-term tradable, it's where we're seeing a lot of the action of the SPX. We're seeing people stack up at 4,300. We're also seeing people throw in the towel and drop from 35 to 34 on the puts, and so they're closing those 35s and or opening the 34s. So just be aware of that. And over on the combo structure over here on the right hand side, no changes whatsoever. So 42, we got COI, POI, which have been just dominant on this Livermore level at 4,000 forever. And then here at 38 minus GEX, again unchanged. We do see the potential of 38 becoming 39, and you'll see that on the last slide here. Of note, because of CPI this morning, we are the open high-low close. These are conservative numbers. We are seeing this quite elevated over where we've been. We do this for option sellers or premium sellers within the Discord. And this gives us a rise. You're not going to get much premium in these areas, but nevertheless, this shows you the safe zone for that. So all things equal, we're seeing bullishness across the key levels here. Taking a look at the PM-Settled Complex, sea of green in context of the overall deltas. We think that's very important. 4,200 here, 4,300 up here at the COI, like I indicated. 4065 is the JPM end of March roll. These are short calls. A lot of them sitting out there right now, and this is why we've got this level here. It's not liquid, but it is present, so I want everyone to remember that. Keys here to take a look at. We are seeing this secondary transition effectively being absorbed down here. We've been seeing this more and more recently. We don't know what the genesis of this is. This is folks kind of hanging low in that 4,000, just above that 4,000 structure, potentially front running any drop down to the 4,000 level. We've been watching this for some time. We are noting that it is being absorbed. The key transition that we're watching here, we're just above it. This is relatively safe. We feel fairly comfortable with this zone. And so in general, very good structure, and it sets us up for a good run up to the north if the bulls decide to do that. Taking a look at the balance of week, crystal ball, transition structure about the same. We're sitting about the same area here. This is how you know it's the balance of week. We got a net expiry over here of calls, and so the bulls have got to step up. The key thing to take away here, for the most part, for the rest of the week, though, calls are in control. So the bulls are in control. Speculation to the upside is sound. It looks very clean. I see nothing that would prevent us from moving up except just normal moves up and profit taking. To the downside, a few cracks in the ice, but we're not too worried about that. Everything's above 4,000, which is that key level. Just note, though, if we do drop into transition for whatever reason, if we do lose the 4075, which is the bottom of the weekly transition, we could find these parking areas around 4060 and 4040. So just be aware of that as we go forward here. Taking a look at the 0 DTE, pretty much balanced, I think. The speculators for the CPI, they have cleaned up, they stepped up, and they added their calls, out of the money calls yesterday, and that's what we're looking at here. To the downside, we are not seeing any panic on those out of the money downside puts. And what I mean by that is that you can see that we've got green and reds down here. That is indicative of the, in the money calls being green and dominating those particular strikes, but the out of the money puts are still dominating. And this is the expiry for today. So basically we're balanced, right? So the fact of the matter is that there are speculators, they're present, and it'll be interesting to see what happens here today with the CPI print. But in general, if we get a good print and move up, we expect that these puts will be closed, and that could provide fuel to take us higher. We'll just have to wait and see what happens here. Taking a look at the 1 DTE, which is tomorrow, so that's for Wednesday, you can see it's pretty much a balanced structure also. So while the overall structures on the maybe longer term are showing a bullish tint to them. The shorter term structures are quite balanced. So opportunistic to the upside, with the exception of this 4235 node that has emerged out of nowhere. No idea where that came from. To the downside, you can see that the out of the money puts are live and well. They're not being dominated by the in the money calls. So the downside speculators are very present. Just be aware of that. So we're not out of the woods. This is not a clean sail to the north here. Another thing that I want to highlight when you see this, and when you guys get the website tool, you'll be able to run these yourselves and see this. This is a pattern that I pay attention to. We typically see this when people start stacking around different levels to the downside. And what happens as price drops through a key level. So 4075 is obviously a very key level for the week. It's for tomorrow, of course, it is the minus Gex level for the 1 DTE. But you can also see we've got some stacking to the downside. And so these become accelerants as we move through here, because Gamma continues to build to the downside. So as this yellow line, as spot price drops, these will grow in magnitude. And then finally, if we lose that 4075, we could start seeing a push towards the downside as the put speculators are emboldened. The call speculators will probably close their calls, and then that all becomes fuel to push us south. So just be aware of that condition. It's part of the if-then statements. Not saying we're going to go there, not at all, but you need to be aware of both sides of the coin here. The combo complex, which is the AM and the PM settled, all thrown together. Very clean. You can see we're back into a green condition. Haven't been here for a few days. Very strong gamma to the north, very strong deltas, both out of the money as well as in the money. In fact, the in the money calls are completely dominating the conversation. The speculative puts that are here are not present. This one line that you see right here is the JPM end of month March short calls at the 4065. They are not liquid, but of course they are present. Those deltas are present and that gamma is present. And so just want everyone to be aware of that. We are seeing, though, that this number is getting less and less as folks neutralize. As we make a run low, people stack calls there, and then, of course, as we go up, they're more and more in the money. And that's neutralizing what we're seeing here on a day-over-day basis. Final picture here, just want to highlight a few things. This is one of my favorite charts, only because it really gives us the landscape, lay of the land here. So 3,800 to the downside, 4,200 to the upside. Those are the goalposts right now. But look at the magnitudes. It could go either way. This is the 3,900 line that's sitting right here, and we could easily see a move upward if people start adding any form of the puts here or closing the puts at 38. We could see 39 emerge. And this is the 3950 line. That's pretty important. Fairly clear that a line in the sand here is the 4030 line. In that area, you can see it's fairly ugly and negative for the most part. So we're calling 4085 really the be careful below this level. We're not expecting it, but just like I said back here, we've got some things that are going on we want to pay attention to. And then, of course, 4,100 really becomes a dominant line for us, and you can see where things are going. The 4,300 line is growing with the 4,200 line. Part of that is because, of course, we moved up, and gamma is spot price dependent. The other part here, though, I want everyone to realize, though, is that we are seeing the addition at the 4,300. We're seeing those calls go in, and that's a big deal, and we're also seeing those puts come out. And when we see that type of speculation, a move upward in plus Gex would be constructive for the bulls. The same thing here, if we see the entire complex moving up, that could be very, very constructive. So with that, I will bid you farewell. If you have any questions or comments or like what you see, we urge you to go to GammaEdge.us. In the upper right-hand corner, you'll see a pricing tab. Click on that, pick your plan, fill it out, and come on in, see us, ask your questions. A lot of great tools, a lot of great traders, and everyone's willing to work with everyone else to help them see what they see. Follow us on Twitter at GammaEdges with an S, and then here on YouTube, two things. First of all, if you like today's content, let me know immediately by smashing that like button. It gives me immediate feedback that I'm providing actionable content that you can use. And then two, follow us, subscribe to us, because Taylor, Michael, and myself are always posting videos, and we would like to educate you on what we see and how you might be able to incorporate this thing called Gamma and Delta and other things into your trading and improve your returns. So with that, we bid you farewell. Make it a great Tuesday and make it a great CPI. Don't get out over your skis. Thanks, everyone.